morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's December 10th. I hope you guys have a wonderful day. Sorry for kind of the late report today. However, we're going to get it out. So we do got two important items here on the economic calendar that are important. We'll start off with the inflation data, which is the Consumer Price Index, or the CPI. So the headline news is the CPI here, month over month, we had no change in the month of October. However, forecast was supposed to be increased by 0.1%. However, it did double that at 0.2%. And then if you look at its year over year, it remained at 1.2%. So relatively very low here. We like to try to get closer to like 2%. And even though this is not the Fed's favorite gauge of PCE, this is still this still weighs pretty heavily on the market. So it remained at 1.2%, even though we had a forecast of a dip of 0.1%. If you look at the core, when you take out the food and energy, this is really what we look at because the food and energy are variables that we cannot control. So we have our control variable, which is the core, and this is really what we look at. And if you look on the month of October, it went up no change. Again, kind of like the CPI, it was at 0.1% forecast. It came in at 0.2%. And also like its counterpart, the year over year did not change. So the core remained at 1.6% with that same forecast. Now, last but not least, the other data we got is jobless claims. We've been having some good numbers. We're kept decreasing. We're down to low sevens, as you can see here. Last week's report came in at 712,000 people. Forecast was supposed to have a slight uptick of 725, and it came in a whopping 853,000 people applying for unemployment, which is obviously not a great sign here. And if you look here, you can see continued claims even rising as well. This could be partially due to the renewed lockdowns again, where businesses are closing up again, and people probably going back onto unemployment. So this is a possibility as well. Let's look ahead here to the headline news. Stocks are a little bit mixed so far this morning. The only index that's in positive territory is NASDAQ. So we got some of the news here, coronavirus. Of course, we all know that see the news daily where the cases are increasing. Hospitalizations are getting impacted greatly. Stimulus, not much change there. It seems like if we get a new one, it would be about 900 billion around. That seems to be kind of like the center point where we're finding on both sides. But of course, there's some sticking points they're trying to work their way through, and it has been kind of sputtering. They did give themselves a deadline, I think, of December 18th of this. So we'll have to see if that gets taken care of as well. FDA is meeting today on the BioNTech and the Pfizer vaccine to see the risks involved with it before they put it to a vote on getting it going. And then later in the month, like December 17th, I believe it is, they're going to look at Moderna for a similar meeting as well. So the first two ones we might get out from BioNTech and also Pfizer, and this will be, again, an important meeting to determine the risk factor with what we see currently before they will put to a vote of basically allowing it to be distributed. We also got ECB had their meeting today. They increased their purchase program, the pandemic emergency purchase program, by 500 billion euros. They also extended their long-term refinancing programs as well. Extended those. Brexit, the talks are ongoing. They had Boris Johnson and the president of ECB, von der Leyen, I think is her name. They are going to be extending the talks through. He's still in town in Brussels until Sunday. I guess they had some dinner last night and talked a little bit, and they're trying to. It's an ongoing process, at least up until his visit will be up until Sunday. So let's see how this is playing out in the bond market. Bond market is down about 2 points, testing the 25-day moving average, kind of similar to what we did yesterday, but this is even more so. Why is usually bad news is good for bonds? However, in this case, bad news is kind of good news for the markets in a way, because with these poor data coming out here, the weaker data like the jobless claims and stuff like that, this is putting more ammunition for a stimulus package, and the stimulus package just creates more supply and demand for mortgage-backed securities and treasuries. To pay for this stimulus package, we have to create more debt, which would be treasuries, to create it. So you're going to create a lot more supply, but not enough demand to meet that, and that's what's driving rates a little bit higher as a result. Now, we're about the same as where we were left off yesterday. We're not really in any position to change in our pricing. So our pricing is relatively the same what we saw yesterday. So as of right now. But as you can see, uh, if we still keep getting this bad news, unfortunately, again, bad news is usually good for bonds, but in this scenario, this just kind of makes more of a case why we need a stimulus package and might light that fire underneath Congress to go ahead and create that. And that is not exactly good news for bonds. So let's jump ahead here to treasuries. Treasuries are up a little bit. As you see, we're just above slightly on 0.93 right now. We're still in that no man's land between the technical and the 25-day moving average. Been kind of sitting in this range for quite some time. Sometimes we've had some pretty wide swings, uh, but for the last week or so, just kind of for the most part sitting in the middle here. All right, so that's pretty much the wrap. If you guys are in the process of looking to refinance or purchase, please feel free to reach out. You can just direct message me from the site you're viewing this, and I'd love to be able to talk to you a little bit more how we can help you out. A little background about myself is I am a loan officer. I do work with a national company. We can certainly help you guys out with your refinancing needs, whether if you're looking just for a better rate and term, or you guys are looking to take some equity out of your property and do something with the money. If you're looking to go from like a 30-year to a 15-year fixed, or if you're looking to get pre-approved and buy and finance your next property, we could help you with all those goals as well. So please feel free to reach out. You guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye-bye.